What is up, everyone? Welcome back to another short idea by the Bear Report. In this presentation, we're going to creep into the insurance industry and analyze a company that has been riding on the coattails of AI, and that's Lemonade. We believe this company has flaws in their AI centric platform, which creates poor underwriting and will fail to scale further given the competitive landscape by legacy insurers and poor customer experience. And if you're just tuning in here for the first time, make sure you subscribe to our channel so you can stay up to date on our future content and make sure to give us a thumbs up. The first thing we're going to look at is the customer experience. Here we will analyze the customer reviews. Next, we are going to dive into the core business where we'll look at their financial statements, unsustainable loss ratios, and their give back program. Then we'll look at the overall competitive landscape from legacy insurers and direct AI competitors, following with our bear thesis on this company. Before we get into those building blocks that make our bear thesis, we need to have a better understanding of what Lemonade does and how they operate. So the company is licensed to sell renters, homeowners, pet, and or car insurance policies in 50 states in the United States. They also hold a pan-European license, enabling them to passport into and sell in 30 countries across Europe. It is important to note that some of these product offerings are not available to everyone since they haven't fully rolled out to some states and countries yet. Lemonade currently offers renters and homeowners in the United States and liability insurance in Germany, the Netherlands, France, and the United Kingdom. Next, they offer car insurance, which just launched in 2021 in Illinois, and they now offer it in just a select few states. Additionally, they acquired a company called Metromile, a pay per mile car insurance provider, back in 2022. As part of that acquisition, they received a full stack insurance entity with 49 state licenses and precision data from over 500 million car trips, which is supposedly to enhance their limited car offering. They also currently offer pet insurance that covers diagnostics, procedures, medication, accidents, and illness. Their basic pet insurance offering covers blood tests, urinalysis, x rays, MRIs, and even CT scans. With this, they offer two optional add ons to the basic plan, a wellness package and an extended accident illness package. Lemonade also provides life insurance through a partnership arrangement with a third party carrier. With Lemonade's term life insurance offering, people can apply online for up to 1.5 million or more in coverage for a term of 10 to 40 years. Like I mentioned in our last slide, the company is still rolling out their products to countries and US states. Notable offerings in their presence in the US, like Lemonade Car, is available in Arizona, Illinois, Ohio, Oregon, Tennessee, Texas, and Washington state right now. Homeowners was also actually announced in early April for France. So this company likes to take their time and mitigate risk by picking and choosing where they go. But unfortunately, this still hasn't necessarily worked for them. So Limited Insurance has supposedly developed this AI-based proprietary platform that streamlines the traditional friction within insurance today. This makes the company approve policies quickly without talking to an agent and makes the claims process instantaneous 80% of the time. Unless it is complex, then it is handed over to an actual human being. All of this is done through AI, which they refer to as their customer cortex. Within this customer cortex, there are 6 separate stacks that create this cortex. First, we have AI Maya. This is their onboarding and customer experience bot. Maya handles everything from collecting information and personalizing coverage to creating quotes and even facilitating payments securely. Then we have AI Jim. This is the company's claims bot. He will take the first notice of loss from a Lemonade customer making a claim, paying the claim, or declining the claim without any human intervention at all. Like previously stated, if it's too complex, it is handed over to human experts at Lemonade. Digging deeper into this AI, they have a bot platform that understands and instantly resolves customer requests without any human intervention. This is called CXAI. Over a third of Lemonade's user requests are handled by CXAI. These requests are like policy changes, payment methods, or additional assistance pre post purchase. Then they have a forensic graph that uses behavioral economics, big data, and AL to predict, detect, deter, and block fraud throughout the customer engagement. This is very complex and it uses machine learning to refine itself. Blender is built from scratch. It's their cutting in backend system designed as a single cohesive and streamlined management tool for customer experience, underwriting, claims, growth. I mean, pretty much everything. Finance, risk teams, it has it all. Lastly, they have an internal bot, which they call Cooper. They also refer to this as Jarvis from Iron Man, Cooper handles complex, repetitive tasks within the company, from helping improving customer experience, manual processes like paper checks, automatically running tests on newly programmed software. So this company is truly built around AI, but what we are finding is that it's not as efficient at the moment when we compare it later to other direct competitors that are both using AI and not using AI. So, how does this process work? Well, it's actually done through two ways. To get a quote and claim, the full one stop shop experience is done through the Lemonade app, but it also can be partially done through Lemonade's website. But Lemonade pushes and prefers for users to download the app to make the process as user friendly as possible. Quickly, I wanted to show a video on how customers would receive a quote through their website. As seen here, the Lemonade website is very user friendly and are greeted by a bunch of live cartoon figures. At the top left, we have our offerings. If you click on either of these, it will give color on each. They also have a give back program, which we'll talk about more here later. But when we go to the check prices, you are then greeted by AI Maya that asks a series of questions. She will ask if you have a Lemonade account. For this, we'll click no. Then she will ask what policy or policies you are looking for. And you can bundle if you'd like. I'm going to choose to bundle car and pet. Then you're asked to give your name. And next, it will ask where your address is to see if this product offerings are available to you in your state region. After this, it's pretty much streamlined quickly, where you'll put your car info and pet info, ultimately getting a policy. Now, for the claims process done through the app, assuming everything is accurately inputted when explaining your claim, and it's not significantly complex, AI Jim will instantly approve your claim and you will get paid in seconds. And Lemonade's approach is to target the younger generations that are tech savvy. Then, as time goes on, these same individuals will stick with Lemonade and expand into more offerings, hoping they don't switch. Much of the data has actually proven this strategy kind of has worked, since 75% of the company's current customers are below the age of 35 and are purchasing insurance for the first time. Lemonade is also the insurance industry's only certified public benefit corporation, B Corp, that is a for profit business whose fiduciary obligations include promoting both shareholder value and social good. Each year, Lemonade aims to donate leftover money to causes that their customers care about. After customers purchase a policy, they ask them to select from a pre vetted list a charitable cause to support with the residual premiums from their policy. Behind the scenes, customers who select the same charitable cause are classified as members of the same cohort. Once each year, Lemonade thoroughly reviews the loss ratio of each cohort, and they pass the financial ratio test required by regulators. They donate the funds remaining, if any, to the charitable cause selected by that cohort. But if they have a loss ratio above 40%, usually it will not receive a give back or they will not qualify. So this is Lemonade's current leaders. We have co-founder, CEO, and chairman Daniel Schreiber. Then we have co-founder and president Shai Wininger, and Tim Bixby, who is the current CFO. So for our last two slides, before we jump into the poor customer experience, I wanted to show the stock price history since IPO up until today, correlated with the timeline of events, and quickly touch up on the insider activity, which isn't concerning. At IPO, the company really sold their story of this AI-based insurance company. They received a ton of money from this IPO, which was indeed it has helped them tremendously, and it was good timing. The stock price hit all-time highs of nearly $190 per share. I think most bulls would agree this valuation was absurd for a startup insurance company. As time progressed, we entered into a horrible bear market, but combined with this, the company started to display ridiculously high loss ratios, which created more net losses for the company. Skepticism started to grow on Lemonade if their AI platform actually works because their loss ratios were consistently high. Then, as we get closer to today, the company has become a popular short candidate, which is kind of warranted. But we began to start to see legacy insurers and direct AI insurers performing much better, while Lemonade is still struggling with little optimism on sustainably low loss ratios. The stock price currently trades around $15 to $18 per share today. So what this is Ortex's platform that tracks everything in real time. It's always up to date with live results. We're going to take a look at the insider buying and selling directly on the open market from IPO to current, including the board members. As you can see, there was a ton of sells when Lemonade sold that story up to all-time highs. Then on the descent, we continue to see more direct sells. Not until we get closer to today's prices, we see an unusual direct buy by CFO Tim Bixby. This is actually a great sign because the direct buy was indeed a large purchase and at questionable times for the company. But this activity isn't very concerning since one of the founders still holds a large stake. The insider momentum for the past 12 months has been neutral. And when we look at the stakes for the insiders, as seen, Shy holds a large percentage here, which is why I don't put emphasis on insider activity for Lemonade. Then Daniel's position is much lower, which can be looked at kind of concerning. But when analyzing the big picture, with Shy holding that big of a stake, it's really not that big of a deal. Now we're going to get into the customer experience at Lemonade, where we will analyze customer reviews. What we're going to look at here are customer reviews from Instagram. Now, I thought most of these were bots at first because there was an overwhelming amount of negative reviews under Lemonade's posts and ads, but the wording and specific incidents in profile visits debunk this. All these reviews basically say the same thing, and that's about the customer service and claims process. Apparently, Lemonade fails to pay out claims they are originally intended are supposed to be covering. That's why most of these customers are frustrated. All these reviews are deeply concerning because the entire Lemonade platform is built around AI. And it seems that this customer cortex they have is flawed in some type of way because this shouldn't be happening. Insurance is a tough business, and people already have a negative stigma with it, but the rate of these reviews from their ads and posts are concerning. What I found even more bizarre was a bot praising Lemonade's service. Some will disagree, but the way this bot was talking made it sound very strange. I even visited the profile, and the profile image was a different person than the post they were posting. So, what I did was made a fake account and asked the bot how the claim process was. And they responded in a way that a normal human being wouldn't. I mean, just look at this exchange. It's almost like Lemonade paid a bot or someone from their company to say this. Then, after they said that, I gave a general, oh, very cool, which one would then assume the conversation has ended. Any human being would be like, all right, yeah, that's it, and just like the post. But then the bot sends a weird paragraph after my response. This was just a very odd exchange. No normal human talks like this. Some will say I'm too critical, but these reviews and this exchange from a potential bot is not good for this Lemonade team. Like I just mentioned a few moments ago, this company has a few common customer complaints, and that's the claim process and how slow they move, and them not covering what they are intended to cover. Also, with the reoccurring issue of people not being able to talk to actual humans. Some people just prefer to talk to humans. This option should be readily available for those select customers, but unfortunately, it's not, and they get frustrated. What we're going to do now is look over the company's financial statements from their 10K annual report, which was released earlier this year. We're going to analyze the year over year increases and decreases for the notable metrics. Starting at net earned premium, we have an 82% year over year increase. Then, when we look at net investment income, this increased 194% year over year, getting us to our total revenue at a 67% increase year over year, which is a significant improvement from the corresponding years. So that's good. As we move down to expenses, we have a 67% increase in loss and loss adjustment expense. Now, that is not good. This refers to total costs that an insurance company incurs due to claims, which really hints at poor underwriting. Sales and marketing decreased to 101 million. This should be looked at neutral, but should be noted that Lemonade is doubling their marketing spend for this 2024 fiscal year. Below that, we have general and administrative expenses, which increased 5%. This should be also looked at as neutral. It was primarily from employee related expenses due to growth in personnel and various costs associated with the integration of Metromile. Then we have total expenses, which increased almost 20% year over year. However, when we make our way to net loss, there was a 20% reduction to this metric. Many bulls will say it's coming down, but zoom out and look at this number. They have a net loss of 236 million. That is not chump change. That is a very large number in the red. As we go further down to dilution, we had an increase of 7% year over year. Some will say that's not good. We have to keep in mind here that this is an unprofitable company trying to scale fast. So, in this context, it's not that bad. It's actually quite common for companies to do this. So, this should also be, I mean, it should be in black and as neutral and not green, but it's not that big of a deal. But ultimately, this company isn't even close to becoming profitable on a GAAP basis. Their expenses are out of control here, and net losses are way too deep. Bulls will point out the reduction in net loss, but they have to understand the inconsistencies in insurance and how their loss ratios are still poor, which hints at bad underwriting. They also need to understand marketing spend will likely contribute to more net losses if they can't get their underwriting under control. And I will show you what I'm talking about in our upcoming slides. Now we're going to take our attention to the cash flow statement. Again, this is their 10K annual report, and we'll be looking at the year-over-year increases and decreases for the notable metrics. At the top here, which we went over last slide, they had a net loss for $236 million. As we move down towards the middle at net cash used in operating activities, we actually have a 26% decrease in net cash used. This is pretty good that it's coming down, but can this consistently move on the downtrend? Because this is basically raw cash burn. Below this, something that needs more color is their investing activities. When we look at proceeds from short-term investments in bonds sold, we have a 36% decrease in short-term investments, then a 153% increase in bonds sold from the previous year. What I want to explain here, and I will show this in our next couple of slides for transparency on it, is that the company is actually liquidating these investments to fund partial operations since they have a low cash reserve. This is not a good sign because the way they operate like this is not sustainable over the long term. So what they are doing is funding operations from proceeds, then reinvesting the rest of these proceeds after business operations have been funded. As we go to net cash provided by used in investing activities, we have a 51% decrease year over year. As we move down to net cash provided by financing activities, we have a neutral 327% increase to $15.4 million. This was primarily from borrowings under a financing agreement, so this gave them more cash along with the investing activities. When we combine those and subtract it from net cash used in operating expenses, we get a net decrease in cash or cash burn of $15 million for the year, representing a year-over-year decrease to cash of $271 million. So I'll touch up on this in our next slides, but the company is having to generate cash from investments and financing activities to fund operations since they are deep in the red. The question here is this a sustainable long-term strategy if they can't become cash flow positive? These are real concerns here. There has been a lot of misinterpretation and deceiving by both bears and bulls on their cash position. If we look at the top here, which was pulled from their Q4 2023 shareholder letter, management reiterated this $945 million cash and investments number. This is a true number. There's no lie behind this. But investors on the bull side think this is raw cash at $945 million, which is not true. The company only holds $271.5 million in cash. But what management is doing is combining their investments in cash to create this mega $945 million number. So again, like I just mentioned in the cash flow statement, they are strategically selling their investments to generate more cash to fund operations. It has worked for them so far, but if they can't become cash flow positive soon, this 945 million number is going to continue to shrink until they eventually need to raise money. So the reason why Lemonade is failing to generate a profit is from these horrible gross loss ratios. Insurance is extremely difficult as a startup. Many will agree with that. And if you don't, then you need to do some more research on insurance. But this company has been operating for almost a decade and is still unable to get their underwriting down. This is why the company is still operating deep in the red, unfortunately. But if we look here, loss ratios are coming down, but it has been very inconsistent. And we aren't too confident to say it will sustainably stay at these levels or at this trend. Management has also blamed cat events for their poor loss ratios in the past, but even when we look at XCAT and Blue, it has plateaued for over a year with no improvements. Below this, you can get a better idea on their gross loss ratios for the past couple years, quarter over quarter. This is the company's gross loss ratio average year over year. It is at a whopping 85%. In order for the company to become profitable, they need to get this average at or below 75%. So when bulls say this is on the downtrend, they are right. It is. But they aren't even close to hitting that 75% average target. As mentioned in the beginning of this presentation, Lemonade has this unique give back program. Now, it's not that big of a concern, but it should be noted that they are taking leftover premiums from customers' policies and letting the customer donate to a pre-vetted list of charities. Management hasn't given much color on the exact percentage, but we can get a good representation of how much is being paid out from these numbers right here. Management did highlight that cohorts with a loss ratio about 40% will not qualify for this program. They also mentioned in their 10K that they possibly might terminate this program completely if they don't improve their financial situation. My question about this give back program is why even continue to implement this when you operate in the red? They should just hold off until their financial macro picture becomes clearer. I understand they are a certified B Corp, but this can be suspended until operations improve. We are now going to look at the competitive landscape of both legacy insurers and direct AI competitors, following with our ultimate bear thesis on this company. So, what I've put together here are the companies that are direct competitors with Lemonade, and I put their market cap value under each business. I've also separated these between legacy and direct AI players. The first company is Allstate, which is massive, around a $40 billion company. Then we have Travelers, around a $45 billion company. Then we start heading into the big dogs like Progressive at nearly $120 billion. Then Geico and State Farm, greater than $120 billion. So Lemonade being around a $1 billion company with uncertainty competing directly with these guys is very scary. With this, we believe Lemonade will head into many competition roadblocks in the future as they try to scale. For direct AI competitors basically trying to use the same systems in place as Lemonade, we have Hippo Insurance, which is around a $500 million company. Then we have Root Insurance, which is just over $700 million company. Now, a couple things here. You may be saying, well, Lemonade is much bigger right now, and these companies offer different products in some cases. Yes, that's true. But what we need to focus on is this AI spectrum is whose AI actually shows promise toward profitable underwriting. As the last Q4 2023, both Hippo and Root showed significant promise improvements in their underwriting profitability, yet Lemonade is failing to show these signs. This starts to make assumptions that Lemonade's customer Cortex software is flawed and poor at underwriting. So not only do we have intense pressure from legacy insurers, but we now run into this question that Lemonade's software isn't as efficient as other direct AI players. Unfortunately, this gets us to our bear thesis on this company, and that is that there is fierce competition with a flawed AI Lemonade software. With the horrible net losses, intense competition, the awful customer experience, and direct AI competitors performing at a much higher level and efficiently, it really assumes that this company is just poor at underwriting, which points to a flawed AI software. Not to mention the intensified competition from legacy insurers, hindering their ability to scale in the future. Limited could definitely turn this thing around and become a massive winner. They could, if they can somehow improve their underwriting. But at the moment, it does not look good for this company. But that is it for this presentation. If you enjoyed this content, make sure you give us a subscribe to stay up to date on our bi-weekly videos, and make sure you like the video. Thanks for watching.